Good afternoon, ladies and gentlemen. Welcome to Banrisul's video conference to discuss the second quarter of 2024. This video conference is being recorded and replay can be accessed in our RI website right after this event. So today's event will be divided into three parts. The first, in which we'll listen to our president, Fernando Lemos, to make a presentation with the main highlights and numbers of the quarter. Then our Vice President and CFO, Mr. Gonzaga, will talk about the performance and numbers of the bank throughout the second quarter. And then we'll finally have our traditional Q&A session during which our analysts and investors will be able to interact with us here, work at the bank's board of directors. So before we start, let me tell you that this presentation has simultaneous translation into English. If this is your preference, just click on the button at the bottom of your Zoom screen. If you wish to ask a question via audio, please press the reaction button and then click on raise your hand. If your question is answered, please leave the queue by clicking on the lower hand button. The presentation we'll make today is available for download in the chat on this platform and on our RI website. We'll soon make it available throughout in our chat. So now I give the floor to our president to begin the presentation of our results. Please, Mr. President, you may proceed. So good afternoon. It's a pleasure to welcome you all once again back to our home because, as you all know, we were out of our home after that environmental disaster that hit our state of Rio Grande do Sul, which affected our infrastructure and the infrastructure in Rio Grande do Sul and losses of lives in Rio Grande do Sul. We spent over 60 days outside our head office. Now we're back. And let me tell you that the bank showed an incredible moment of resilience. We didn't have any moments of down systems or idle systems. Even our branches that were affected, they were virtualized and kept providing 100% of their service. As I told you, the head office was flooded, but we managed to work outside our head office with some of the operators working from home and other people working from provisional areas. Our data bank, our CPD2, was transferred to another area. It proved to be enough. We had never tested so in such a hard time before. So the bank and the bank's infrastructure showed resilience and showed how prepared it is materially and technically speaking. So the bank was 100% operational always. And from then on, we started working on recovering Rio Grande do Sul and paying attention to our businesses. In the first moment, our analysts and all of us thought that the bank would be highly affected, but after a while, we realized our resistance was needed, and we had our portfolio somewhat affected. Mr. Gonzaga will share some figures with you, but what I can share with you right now is that Banrisul worked heavily to help Banrisul recover. It remained strong and healthy and robust. I believe we got out of this disaster even stronger. We launched a new products, a special credit, a special loans for companies with over 1 billion reais for the company's working capital. After that, BNDES, the Brazilian Development Bank, also provided some lines. We provided some of these lines, and we also had an SMEs operations with over 250 million reais. So the bank has worked heavily to recover. We are now waiting for the 24-25 summer crop. We have launched our our crop plan. So we are working heavily to help the state of Rio Grande do Sul to recover, and the bank has played a major role in this recovery. We increased our basis of customers, especially in terms of companies. This is one of our focus. The Conta Única, the single account product, was well received by companies, and we have been advancing. And Vero also expanded its work. We managed to reach important players for Vero and Banrisul, companies that started working with Vero and Banrisul. So this recovery is very safe, very strong. You know how we work, how this board of director usually works. We work more in a more conservative way, but we safely and constantly move forward and taking advantage of this leverage of Rio Grande do Sul economy because of infrastructure job sites and revamp and reconstruction in businesses, in stores, and many people need to buy uh, appliances for their homes. And so together with our clients, with the companies, we've been working together to make a very good second semester for the bank, but also for for the society as a whole, the economy as a whole, because we are a state bank. We believe in the economy of the state, and we know how to do that. Will help rebuild Rio Grande do Sul based on different operation, different infrastructure, but safely we work to provide support to Rio Grande do Sul with robust numbers and believing in Banrisul's ability to keep on growing. In the second half of the year, we are going to launch new products, many of them based on the digital area, so we reach other types of clients in our bank. And we have already launched a nice campaign for the companies. And we hope to close the first semester very well with that. And we believe, as I said, in the recovery of our state, which is one of our main roles and our main concerns right now. So now Gonzaga will share with you some of our figures so you can realize how strongly we grew, especially in terms of company, in the treasury of the bank. The treasury had an expressive growth, as we'll see soon, which make us feel confident to advance safely to help the state to recover. So Mr. Gonzaga, the floor is yours, our Vice President and CFO. Well, good afternoon, everyone. As our president said, we have worked with resilience after this disaster, this tragedy, this flood that affected the state of Rio Grande do Sul some months ago. So in this first slide, this slide gives you an overview of what happened in our bank right after the floods, the climate events that hit the state and what it meant to Banrisul. Well, the total number of clients uh, affected by this climatic event was the total number was 549,000 clients, and 526,000 of them are individuals with 23,000 companies. So 12% of individuals and 11% of companies were affected. In terms of credit, we had our exposure of 5.9 billions affected by the climatic event. So the clients within the areas that were affected, they account for 10.9% of the portfolio. Rural was 1.9 billion, payroll 1.5 billion, companies 1.4 billion, real estate 0.5 billion, and other loans, other credits 0.6 billion. In terms of rural credits, rural loans, many municipalities were affected, but the crops had already been harvested. They were in the silos already. So less than 15% uh, had loss in their crops. In terms of payroll loans, all civil servants kept their jobs. We just elongated or expanded the payment, the dates for payments. We have some, of course, some default. We hope that this is under our provision. Real estate had around 100 million reais in indemnifications for people who had their houses affected, but we had the reinsurance operation for 90% of this portfolio. So the loss was 9 million reais only. 50% for the bank and 50% for the other partner. So 4.9 for the bank. And individuals, most of them, they work in the public sector. They are civil servants, so their operations have full liquidity with a low level of default, as expected. Next slide, please. As the president said, the Conta Única, Banrisul Conta Única, which is a new product. We have even higher numbers now in August, so you can see the numbers there. The PRONAMP, which is a SMEs support program for the state, was 213 millions, and the federal PRONAMP was 146 million granted. And BNDES, the Brazilian Development Bank, provided over 360 millions granted by the federal government. And 362 million were already provided by BNDES in terms of long-term investments too. In terms of postponed operations, this is important to mention because the market was a little somewhat concerned about that. We had 2.2 billions in postponed installments, which accounted for 4.1% of the total portfolio. Payroll was 1% of the total portfolio and rural 2.7% of the total portfolio. We had some other installments in credit cards that were postponed. Most of them are already okay. They are performing normally, regularly for credit cards clients. And also, there was some installments of individuals' portfolios and payroll loans. We provided them with 3 to 4 months. More, they are all paying on time, no default rate, and loans for the municipalities continue. So in individuals, our losses are nearly zero. And for rural credit, it's very safe credit, safe loans. There was insurance and guarantees. So very interesting credits. Let's see how the uh, federal programs go. And this is another type of idea we need to understand. This is our rural loans portfolio, one of our highlights. We have 1.3 billions now in 9.9 last year in June 23, 23.8% in growth. We have emergency loan for the agribusiness, 643 millions for the reconstruction and new products for rural producers. There will be a limit, and there will be a limit for this account with the goal of having more profitability in this portfolio. And also rural producers credits, CPR, which is being launched this month with 100 millions in working capital. We'll see how it goes in the next quarters. This is a product that the market knows about, but for us, this is new. For Banrisul, this is new. And we have 12.3% percent growth in crops, the highest in our, this is our highest crop plan, 31% growth for the Banrisul crop plans. We grew in 23, we grew 9.3%, in 23, 24, 11%, and for 24, 25, 12.2%, with high liquidity to make this loans available to our clients. We are very careful with this portfolio, and the performance has been very good with low levels of default. Next, please, our highlights. Mm, Net income, 247.3 million, 9.2% increase in the year and 31.9% increase in the quarter. Managed to perform very well under the circumstances with good results in this past quarter from April to June. Net interest income was 1.613.9 million, 15.9% increase in the year and 5.1% in the quarter. And administrative expenses, there was an increase of 5% in the year and 2.2% increase in the quarter. In terms of services fees, they were 584.6 million, increase of 9.7% in the year and 1% in the quarter. And later we'll check the service portfolio, which is an important indicator. Credit, loan portfolio, 54.7 billion, increase of 6.2% in the year, 1.6% increase in the quarter. Total funding has a special highlight. It was exceptional with a 20% increase in the past year and 8.4% increase in the quarter. So considering the crisis, prices are never good, but in Rio Grande do Sul, our clients see Banrisul as a safe place for their financial applications. And the Basel ratio was a very good ratio, 18.5%, 2.4 percentage points in the year and 0.8 percentage points in the quarter. And later we'll talk more about the Basel ratio segregating Tier 2 capital. Next, please. In terms of profitability, the net income, as I said before, 247 in this quarter, 187.6 in the first quarter, so 434.9 in the first half of this year. If compared to the first half of 23, it was 439, almost the same, just a decrease of 1.1%. According the financial margin, the net interest income, we had 187.6 million, credits NII 77.6%. It was very important for our loan recovery in the second semester. And loan loss provision also had a decrease with 103.5 million, administrative expensive 23.3 negative side, and 96 or 98 in other expenses plus taxes. Closing the second quarter of 24 with 247.3. Next, net interest income, very good, 19.2%, measuring the first half of 24 against the first half of 23. We had a second quarter with 613, and in and the first quarter of 24 was 1.536.3, uh, and the second was 1.613.9. But what matters is this increase of 19.2%. In the financial margin on profitable assets, 5.47%. There was a change in net interest income, nice, very good. We thought in the beginning of the year that it was going to be it was going to be a little better. We thought it could have been better, but it was stabilized in 10.50. So the performance was not as expected. And considering the second quarter of 24, one 613.9, with individuals 48.3, companies 17, specialized with a decrease of 7.8, credit recovered 3, and treasury in 23.1. So this is how the result is composed. In terms of loan portfolio, the analyzed growth, considering the figures year over year, there was an increase of 6.2%, 25 millions in portfolio. In the companies, 8.3 millions in the commercial portfolio. There's a total credit portfolio of 11.5 billion, 3.2 billions in specialized credits, like a real estate, rural, and other BNDES lines. And 75% of this is individuals, and the others, almost 24 point something percent, are companies, are commercial clients. Now, regarding our asset quality, basically, it was the same if consider the first quarter, 3.5 in the company, 2 in the individuals, so it was 2.3. With a coverage ratio of 206% in June, which is reasonable, a little below the previous quarter that ended in March, but it's within our calculations for this coverage ratio, and the provision and expenses of cost of risk, 2.5%. This is good if you consider the market in general. Our number is very good, it's conservative, even considering the other players in the market. We're closing this with 303.5 millions, 254 millions in provision expenses, and the rest of written off credits. Next, administrative fee expenses, sorry. We had some losses. There was an increase of, the INSS advanced the payment for the month of May, for example. It paid beforehand. It paid in May what was expected for June. So it increased our administrative expenses. There were some remodeling due to the climatic effect. We needed to replace some of the machinery. So there was 4.3% in personnel. The portfolio, the free market portfolio for the INSS loans. We had partnerships with a company called Ben that we have been administrating, and to have a better profit in this portfolio. And other administrative expenses that I mentioned, uh, is 6.4%. We renewed our contract with IBM, and there was an OPEX fee, an administrative fee that is higher because of the renewal, 320 million reais. And there were some marketing expenses because we had to collaborate with the market, considering the situation in Rio Grande do Sul in May, as our president mentioned in the beginning. So it led to 6.4% increase in administrative expenses. But if you consider the general background, it's 10.4% considering all the cuts the bank made. If you consider this in service fees, it's 10.4% in the positive side. There was a good performance in exchange operations and also operations with the federal bank. The market is very restricted in terms of service fees. Even so, we reached 10.4% in these expenses. And if you consider the income 1B 163, we could perform a little better considering the expense of personnel. With one, we managed to detach these expenses considering the payroll of our staff, the bank staff. Well, considering funding now, we measure this with the other players. If you consider our position in comparison to other players, our performance was excellent. Um, this number shows funding that is a judicial deposits fund, resources from the judiciary power that they manage judicial uh, funds. We manage this fund. That is a fee attached to this, which is reasonable. And in the liability, this is going to appear in the time deposits. So 8 billion reais, 6.2 in the fund, and 1.4, 1.6 in the fund. So 6.2 billion reais more. If we consider the two judicial deposits, we have 8 billion reais and 93 millions, 93.6 millions. So it's 15% in terms of funding in the past year, which can account for the 20 billions in the quarter from March to August. So the market sees Banrisul as a safe place for funding, for the collection, the finding of funding. And considering our customers, individuals that paid uh, installments of payroll loans, they are not paying these installments now. They had a stop period or a grace period of 6 months. We can say that this helped us in the sense, but funding increased both in individuals and in terms of companies. Our funding is very diversified, 62% in individuals, uh, 64 in companies. Then we have large companies, 1.6 of others, a very interesting funding breakdown. The top 100 clients, they account for 13% of the funding. The top 50 clients account for 11% of the clients, and so on. So there's no problem if we lose our main client, because our client basis is very diversified. So this is very important in terms of funding. If we consider the cost, we have a funding cost of 85.3% considering Selic interest rate. And in time deposits, it's 81%, 81.8%. And with a very friendly cost, I would say. It's not cheap, I wouldn't say that, but it's a friendly cost, which then you can have a very attractive margin for our treasury. Next, please. As I mentioned, in terms of capital, in June was 20, in June 23, it was 16.1%. Now it's 18.5%. We have a bigger appetite from companies in the market of Rio Grande do Sul in terms of payroll loans, and there is an stability. And then we have these payroll loans, which are stable. So we are moving towards other clients, companies with digital products, Conta Única products, very well designed products to work with companies' working capital, a very friendly format for companies to manage their cash flow on a daily basis. So this 18.5%, this figure shows we have a credit and loan appetite so we can take some part of this Basel ratio, which is high. It would be good if the bank was more leveraged. But if we remove all the tier two, 1 billion 800, 1 billion point half in dollars issued abroad, and LL, LLF, if we disconsider these two applications, we still have a comfortable position with 15% in Basel ratio. So our Basel appetite would be 14.4%. So this is our 2024 guidance. We understand this is more adjusted. Total loan portfolio was restated to 3 to 8%, cost of risk 2% to 3%. Our administrative expenses were also restated from 5 to 9%. We've always tried to do our homework, to trim our expenses, and to deal with some extraordinary expenses in a good way. As I mentioned, we had some extraordinary expenses such as the INSS and other administrative expenses, but we will manage to be between 5% and 9%. And in terms of net interest income, because of some occurrence such as credit cards and other 100% tables, and Selic also was not what we expected. Selic is 10.5%. So our net interest income was restated to move or to range from 18% to 23%. So this is our promise towards the market. Now back to our president, and later will be available to answer your questions. Thank you, Gonzaga. It's very important to show the numbers to you, consolidated numbers, consolidated figures that make us feel that we have overcome the worst of the disaster that hit Banrisul. And as I mentioned before, the bank is working strongly and looking forward to keep on growing in the future. I firmly believe Rio Grande do Sul will recover with the help also of Banrisul, and also based in new products, new technology products, mostly digital products for individuals and companies alike. We are advancing in this area. We feel safe to say that the bank is moving forward safely, and we have this commitment, this strong commitment towards the state, because it's our interest to do so, and we believe in the growth of the state. We preview a very hard second semester. We have a lot of hard work to do, but our people is resilient. We believe we will need to rebuild things in a different way, but even that opens new avenues of growth to our bank, including the reconstruction of Rio Grande do Sul infrastructure. The state government has been preparing a major project of reconstruction of roads, bridges, other types of infrastructure, uh, all the rivers, I mean, the rivers that were affected, they need work to recover this infrastructure around them. And we will be working alongside the government. The bank is prepared to do that, and our technology is also prepared to advance, to move forwards regarding this. We have a very positive perspective for the second half of this year and for the next few years as well. Thank you very much. And now we open to our Q&A session. Thank you, Mr. Gonzaga. Thank you, Mr. President. And now let's start our Q&A session. So let's start with our first question. Please open the microphone to Eric Ito, Bradesco BBI. Hello, Eric. Can you hear us? Hello, Nathan. Hello, everyone. Thank you for this opportunity. I have two questions. I would like to understand more about your net interest income and how this uh, postponed programs had an impact on your portfolio. I would like to understand a little better how the financial margin, the net interest income was impacted, if we can expect a negative impact in the third quarter or in the fourth quarter. And regarding the guidance, we increased 2 to 7 to 3 to 8, right? But if we consider the previous quarter, it was real estate and rural. So what can we expect in terms of growth? Which mix do you expect to grow? The payroll loan has reached the ceiling, maybe. Maybe you should devote your work more to companies. I would like to understand more of your perspective, please. Well, regarding net interest income, on the contrary, the first half and the first quarter, in the first half of the year, payroll loans, they were postponed, and the incomes were all accrued for. So we performed this revenue, this earnings. There was a credit or loan of 4 months that was postponed for 4 months, and the major mass of loans was postponed for 6 months. So these loans, these credits were accrued for, and for the 4 month loans, there was a small part of this portfolio that had no income, around 500 million per month, less, I mean, 25 million, 60 month, less than, sorry, less than 500,000 reais per month in income decrease. There was some lawsuits by some clients that were affected, and then we had some agreements with Procon and other judiciary branches. Regarding rural loans, the operation was regular, real estate the same. Our provision was, we made an additional provision of 128.6 million reais. There were additional to be in line with the average portfolio provision for PDV severance plan. We had a 2 month of credit card that we postponed in May and in June. So there was a income reduction. And then we will start collecting in July, and even in the first week of August for the accrual of these incomes. There was so there was an impact on the net interest income. But I mean, the major thing was the credit card. When we opened the income, when the numbers were approved by the end of November, and in January, there was 100% of the credit card uh, income. So it wasn't a strong reflection on the net interest income. we expected to have 9.5% in Selic interest rate, but it was not what happened. So there was a negative impact on our net interest income. Now, regarding credit portfolio, the loans portfolios, there were better performance in the real estate and rural loans. These loans, I mean, rural loans depend on government measures, if they're going to be postponed, which costs are be applied. So our horizon depends on the monetary council decided by the government. So we have a strong appetite on the Conta Única product and digital products. We have a very good appetite in the market considering these products. We believe the market in Rio Grande do Sul has 80 billion loans and free loans in credit. So our position is very timid, I would say, is very small in this portfolio. So we could grow, we could double our size in in companies, in corporate clients. So we need to have a better prospection of companies. We've been training our staff, our network staff, our branches, our managers. We have a campaign for corporate clients portfolio with operation liquidity, with very good liquidity. We believe, we understand that we need to look for the clients and have a better performance for this portfolio. I understand that our net interest income can be better for companies this next semester. And in the other portfolios, I expect them to be maintained or even grow. And as I said, we expect to have a better prospection to grow our portfolio, our corporate portfolio. I just wanted to make a compliment regarding the normality of the business environment. In Gonzaga's presentation, we noticed that the loan recovery was almost the same considering the first and the second quarters. Considering that during the floods, we didn't have any active collection, this shows the strength and resilience of the Rio Grande do Sul's economy. So in the beginning of the flood, we weren't sure about that, but now we know how resilient the economy is. So we believe we'll have a better prospect for the future. Oh, Eric, is this answered? Thank you. Now, next question. Ricardo Guspin from BTG Pactual. Hi, hello, Nathan. Thank you very much. This is Ricardo. I have two questions. So the guidance we reviewed for NII indicates an increase of NII for quarter of around 7%, considering the first quarter. As Selic interest rate is not going to go down till the end of the year, I would like to understand where do you expect this improvement in NII? So how do you see this improvement in NII for funding profitability, or if you rely more on your mix of products? So, and the second question is, I'd like to understand the level of provisioning for the individuals and companies loans, payroll loans, which are not affected by the floods. Thank you. Yes, you're right. The Treasury will help a little in the margin in this net interest income. 10 billion reais is the defined figure. 58 B of deposit, and we are realigning the interest rates. We were a little aggressive in INSS payroll loans, but we are going to be less aggressive for the individuals. We have what we call a fidelity loan, which has a very good rate, very friendly rate. The Conta Única for rural loans, it has a good margin for the portfolio. There is space, there is room for a good rate with some space in terms of margin. Corporate clients have a good margin. So we are very optimistic considering our treasury liability mix. We are also composing in our treasury 2 billions in debentures from good companies in the market. We left that pure Selic treasury they used to have. Now we have almost 2.5 billion in treasury. We are performing 112, 113 of. So the cost of treasury and the automatic CDB increase what we have been composing in terms of loans and prefixed assets, maintaining CDI conditions, or even for DI, even if the government attaches a rate, it doesn't have any problem in the assets. The balance of indexed operations in the liability versus indexed operations in prefixed operations, that is very well adjusted. There is no big margin right now in terms of our assets and liabilities. They are very well adjusted and they will become even better adjusted in the future, in the near future. Even, I mean, the Selic won't have a big impact on that. We're very, uh, we have a very, we have a very positive perspective on that. Well, in terms of provision, we had an additional provision of 128.6 million with payroll loans accruing a rate till November. This loan will be very adjusted in terms of provision. Uh, Companies, loans, we are working on that, and we are working very hard to renegotiate and create a new profile. It's not about a new agreement, but create a new profile for these clients, giving them a higher guarantee of liquidity of in terms of interest, uh, credit cards, pay slips. We are Our director has a team to do this to redefine the profile of this corporate clients. We've been renegotiating with these customers to provide the bank with safety regarding provisioning. We are in a very nice position with no surprise of IRJ, and we are very safe in terms of loans. Okay, just a follow-up regarding this migration, this change in the remuneration of automatic CBD. How much of this balance has migrated, and how do you still need to migrate? Well, it's not about migration. It's a spontaneous funding. It's a product that is not destined to investment. It's a residual amount from current accounts. Clients spontaneously sign an agreement authorizing that residual balance to be debited. We do not migrate portfolio. Oh, pre and post. Oh, our funding of 58 billions was all post, and now is 47 billions in pre and 10 billions in that is indexed to CDI. We estimate that by the end of the year, we'll have 12, 13 billions in the pre-operations, and maybe our goal is to reach 50 B in the post-operations as well. We are very active in terms of funding. Our funding price is a little below Selic. Selic has 108.1% in the Selic margin in titles, in bonds, as you know. So we expect to have 3 billions in policy debentures in LS of good quality in the interbank market. You can make some money with that. Just to complement, we used to had 15B for post CDB, automatic CDB, but we have migrated. There is a residual amount. This client remain in this operation for a long time. But what matters is that they have their money here and this money is well taken care of. Is that okay, Ricardo? Thank you very much. Now moving on, Mr. Olavo Artuso from UBS. Hello, Olavo. Hello. Nathan, can you hear me? Yes, yes, we can. Thank you. Thank you very everybody for this. I have two questions. One is the bank's coverage ratio that is 206% in this quarter, one of the lowest levels since 2018. And considering the additional provisioning considering the climatic events of 129. So what can we expect from now on, considering this coverage ratio, given that the guidance for provisions, if we make some simple calculations, it points to a reasonable stability in the second semester. So what do you expect? How do you expect to operate this cover ratio from now on? And so the idea is to maintain it in this level, or do you expect it to drop in NPL? And maybe in the near future, this can move this figure upwards. And the second question is about the payroll loans agreement for uh, state civil servants, which was established in 2016. Uh, the agreement was expected to be signed for 5 years, but it was signed for 10 years. Then it was readjusted according to Selig. If I'm not mistaken, it's going to reach its maturity in 2026. But as I consider this topic to be of relevance, my question is, do you are you have you discussed with the government regarding the amount of this agreement which was relevant for the bank back in 2016? I'm trying to understand how you're dealing with this discussion for this next 12 months regarding this agreement. So portfolio, the loan quality, this index is not too volatile. And as companies have been stabilizing, so the movementations are not so strong. Uh, our expectation is to maintain this level, maybe a little better, maybe a little higher, 210, 220, but not more than that. So maybe around that, maybe 220. But according to our calculations, there's not a lot of volatility. So this will be the level we remain at. There's nothing else we can do in these terms. Our level of renegotiation, debt renegotiation levels for individuals and companies, there's always something that leads to an increase of this portfolio. But I don't see any problems regarding volatility. Maybe we'll go a little upwards, but not so much. So this number is given for the semester, I would say. Well, hi Olavo. Well, regarding the state payroll, we have a very good relationship with the state treasury. And after I became the president, we streamlined this relationship even more with the state treasury. We rebuilt the payroll loans. We remodeled the payroll loans with the state according to our current view, there was a super in-depth, uh, there was a super in-depthness of this loans. So we put in some limits and some margin in 35% and maximum 84 months, because they used to have 150 months. This is not a payroll loan. This is more like a real estate loan. So we remodel that, streamline that. But regarding the portfolio and regarding this agreement with the state, we haven't started renegotiation. But yes, we will need to renegotiate in terms of amounts, in terms of length and months included. But we know that this portfolio will remain with Banrisul with uh, proper levels, given the relationship we have with the Treasury and the interest of the Treasury, because the Treasury, the state Treasury, is the controller of the bank. Uh, Thank you. Just as a little follow-up regarding the Grace portfolio, maybe can you talk about the overall or the average credit in terms of was it 6 months? Yes, there was a residual of 4 months, but most of them had a grace period of 6 months. Very nice portfolio, same interest rate, and fully with fully good payments, no default ratio. Thank you. Thank you very much. Now, Antonio Huet from Bank of America. Hi, Antonio. Hello, everyone. Thank you very much for this opportunity. So I have two questions. They are related. So you mentioned that the total of the portfolio in the areas was around 6 billion, out of which you renegotiated 2.2%, 2.2 of them. So this difference of this 4 billions, this what about them? Aren't they under risk? Or if we could increase the renegotiation of this portfolio for the third quarter. Another point regarding these renegotiations, if we put together the government programs and the guarantees provided, how much can you accumulate, can you accrue if we put together the different programs to fight against a potential default ratio coming from this renegotiated portfolios? I would like to understand how this loans are going to behave. And you mentioned that the Basel ratio is above the target. We have a surplus, and maybe you could be more ambitious in terms of portfolio growth. I would like to understand more of your focus. I understand that the payroll loan is somewhat at its limits. But what about the opportunities? You mentioned the reconstruction of the state infrastructure, more risky uh, loans for individuals, for companies. So what about this Basel ratio? How do you understand that? Okay, can I start? Well, Antonio, we need to distinguish between two analyses. The first analysis was the exposure of credits for clients that were affected, 5.9 billion, around 10% of the total portfolio, right? Sorry, there's no sound. Not all of them were contemplated by the postponement measures. So the bank launched several postponement measures. It was 10 pay in installments, and the total portfolio were affected in 4.1%. Out of the payroll loans, we contemplated according to the loan 4 months, 4 installments, or 6 installments. So these are they are separated analysis. They are somewhat connected, but they are separated analysis, I would say. What Nathan just said, well, we had this, we we had 4 installments for some, which gives a level of profitability 500,000 reais, Brazilian reais per month. No interest rates for these 4 installments. For this bank, it's a residual amount. The press discussed the trade unions discussed that, but it's part of the scenario. We are used to that. 99% of the bus does not affect us, I would say. And in terms of additional or postponed installments, it's good because they do pay their installments and you are growing your portfolio. So there was also 2.7 in rural, postponed for everybody, postponed for the whole state till August the 15th, till tomorrow. And we are going to expect for the new rule, the new ordinance. The crop loss was very little in terms of percentage, considering the size of the crops in Rio Grande do Sul, in soy and rice and other products. The amount or the percentage that was lost is very low because most of the crops had already been harvested. So this is what matters to us for those who plant and have their crops. Regarding portfolios default ratio, is that it? I would like to understand more your understanding. Our credit appetite for individuals is the same. We always have a motivational campaign to refine portfolios, to increase the rates of these portfolios for the INSS. There is room for improvement, for growth. In the future, we are going to buy some of the INSS portfolio. This is a very good product with excellent margin. This is an excellent portfolio in terms of there is a very low default risk attached to it. In the rural portfolio, we were going to renew the portfolio. The portfolio is highly qualified. The same applies to real estate portfolio. So they are directed portfolios and free assets, INSS and state payrolls and private loans. All of our uh, all of our portfolios are very good. We do not have a lot of loans for vehicles, only in consortium. This is very low for vehicles. For vehicles loans. We do work with vehicle consortiums, but we do not have direct vehicle portfolio. But for corporate portfolios, companies portfolios, this is one we want to make grow in Banrisul. One of our major issues is have good quality portfolio, a good quality corporate portfolio. And in terms of a Basel ratio, we want to have a little lower leverage. So to have a result that is in the same, that is aligned. Now regarding loan appetite for the companies in terms of portfolio growth, we have companies with receivables, guarantees to increase our bases. We are working strongly to increase our bases. We are working with a consulting firm to remodel our risk calculations, our cost of risk calculations focused on increasing the bases and distributing loans and credit for more clients. So we want to grow, but we want to grow with safety and with quality and operations liquidity. In terms of the companies, we are working hard, checking the models, looking for new opportunities and potentialities that are in the market that we haven't covered yet. So we have a great expectation. We know that we have proper goals and have good estimates we estimate good growth for the second half of this year. Thank you very much for your answer, your thorough answer. Thank you very much, Antonio. Now, another question. Eduardo Nishio from Genial Investimentos. Hi, Nishio, the floor is yours. We cannot hear you, Nishio. I'm sorry. Hello. Yes, now we can hear you. Hi, Nathan. I'm sorry for the audio problem. Good afternoon, Gonzaga and Fernando. Now, my question regards growth, the growth of the company. I'd like to understand more about the guidance that you showed now. Given that the loan appetite in the second semester will have an acceleration, you have a super funding. If you look at your balance, this is super strong. Basel ratio is very strong too. So couldn't you accelerate even more? Accelerate loans even more? I know there are some lines that are facing some setbacks, but the guidance almost didn't change, just 1 percentage point of difference. So could you approach the issues? What is what the Conta Única product and digital accounts can bring you in terms of portfolio quality? What about this digital initiatives? What should we pay attention to in the second semesters regarding this digital initiative? And then the second question has more to do with the impacts and the quality of the portfolio. I just want to understand a little better. Out of this 5.9 billions that were mapped, only 2.2 billions were postponed, right? 40% of the portfolio. So I'd like to understand more whether this is performing well according to the accounting rules. And what about the profile of the portfolio that is being renegotiated or is undergoing change? Could you talk about this new profile of this portfolio, the remainder of the portfolio? Thank you, Nishu. I know Ivanor, they're going to answer him. Just let me talk about the exposure, the 5.9 billions. They refer to the total of credit, total of loans over 548,000 clients that were mapped using IBGE, the Brazilian Institute of Geography and Statistics data. I mean, this 548,000 clients, they were affected. So the postponements of 2.2 billions in terms of loans installments, they are within this recovery plan with a series of initiatives for several portfolio loans to give a better to help our clients who were affected by the flood. So these are not directed associations. Okay, so if you want to talk about the Conta Única and digital accounts. Regarding digital discount and Conta Única, our growth projection or estimate is about 20 to 30% for the company's portfolio balance. We are performing with numbers that indicate to us that we're going to reach this. We have made some internal activities. We underwent some activities and some campaigns And we also have promoted incentives and commercial incentives to first recover the collection portfolio that we have lost with time. Many of payment slips in collection, payment clients were lost, and we made an effort to bring this collection service back. We remodeled them. This is fully digital now. And we also have a partnership with a company that provides services. We can validate the invoices and the slips, the payment slips. So it's very safe for us in terms of liquidity. The Conta Única is our main product because Conta Única attracts the possibility of several types of guarantees, real estate, CDBs or bonds, credit card. So we launched now, we have launched and we could incorporate the PIX, PIX guarantee. So the receiving flow of companies that transit through the bank, we use this flow as a guarantee for Conta Única. And we have a very good expectation, and we estimate and we are convinced that we'll have a very good performance in companies around 3 billion growth in our portfolio. Thank you, Nishio. Thank you. So the renegotiated portfolio, if you could talk more about that, please? Well, what happened regarding our loan portfolio, we didn't renegotiate it. What we did was we gave 4 to 6 installments for our clients. We postponed the the maturity date, but the agreements and the contracts, they remained with the same maturity date. What we did was to reprofile them considering this grace period. Some of them pay interest rates, some others don't. For those who pay the interest rates, these interests will be incorporated in future installments. Well, the provision kept the previous rating, the rating that was used before the flooding. If and we were very conservative in terms of increasing the rating for clients. The bank is being very conservative to not have an impact on its balance. What about the size of the portfolio? Today, the renegotiated portfolio is around 2 billion reais. Perfect. Thank you very much. Thank you, Nishio. Now another question. Pedro Leduc from Itaú BBA. Hello, Pedro. Hello, Nathan.